despite it. Just when you thought global trade tensions had simmered down, he strikes again. Donald Trump, never one to shy away from controversy, has thrown another economic curveball. This time it's a fresh 10% tariff on every single Chinese import, effective February 1st, 2025. This isn't just business as usual. This is a seismic shift echoing the trade wars of 2018, which rattled economies and left businesses scrambling. But what's the real game here? Is it about power, politics, or something far more strategic? Today, we unravel the mystery behind Trump's latest tariff move. What does it mean for global trade? For you, your wallet, and the delicate balance of world economies? Let's break it down. Why this matters to Singapore. To understand the gravity of this situation, we first need to look at what makes Singapore's economy tick, and why any disruption to global trade could send shockwaves through this small but mighty nation. Singapore isn't just another city-state. It's a strategic hub that connects the East and the West. Its lifeblood? Trade. Billions of dollars worth of goods flow through its ports each year, making it one of the busiest trading centers on the planet. But rising tariffs, like the ones recently imposed by the U.S., threaten this delicate balance. Higher import and export costs ripple across industries, forcing companies to adjust their operations or abandon certain markets altogether. And when trade volumes decline, Singapore's economy doesn't just slow down, it suffers. The businesses that depend on seamless international supply chains suddenly face rising costs, shrinking profit margins, and logistical chaos. Then there's the role of multinational corporations. Many of these global giants have chosen Singapore as their regional base for one reason: access to open, efficient trade routes. But with new tariffs reshaping supply chain strategies, some corporations are starting to explore other regional hubs that might offer better conditions for their operations. If this trend continues, Singapore's once unshakable position as the go-to hub for international business could be challenged. Economic forecasts already suggest potential dips in GDP growth if these trade conflicts persist. Singapore has weathered global storms before, but the world is changing rapidly. The question now is, can it adapt quickly enough to navigate this new wave of trade disruption? A double threat. Singapore's economic challenges don't end with rising tariffs. In fact, there's another storm brewing, one that could be just as damaging. The strengthening U.S. dollar is creating ripple effects across the globe, and Singapore isn't immune. A stronger dollar makes imports more expensive for countries that rely heavily on global trade. Singapore, being a small, resource-scarce nation, imports the vast majority of its goods, from everyday essentials to high-tech components. When those import prices rise, businesses and consumers alike feel the pinch. For businesses, this translates into increased operational costs. Companies that depend on imported raw materials are now paying more just to maintain their production levels. Many of these costs are inevitably passed down to consumers, driving prices up at the retail level. For Singaporean families, this means higher prices for groceries, fuel, and other essentials. What used to be manageable household expenses are quickly becoming financial burdens. The rising cost of living is squeezing budgets, making it harder for many to maintain their standard of living. But the problem doesn't stop there. Inflation, fueled by higher import prices, adds another layer of complexity. As the cost of goods and services continues to rise, the purchasing power of the Singapore dollar weakens, creating a vicious cycle of economic strain. This double threat, rising tariffs and a stronger U.S. dollar, puts Singapore in a precarious position. Its economic resilience is being tested on multiple fronts, and the challenge now is finding ways to stabilize the situation before the cracks in the economy deepen. Hidden risks for Singapore. Beyond the immediate challenges of tariffs and a strong U.S. dollar, there are hidden risks lurking beneath the surface, risks that could entangle Singapore even further in this unfolding economic conflict. One of the most concerning threats is the possibility of secondary tariffs. These are penalties imposed not just on direct trading partners, but on nations that maintain strong economic ties with those under tariff restrictions. In other words, Singapore could face punitive measures simply for continuing trade relationships with countries targeted by U.S. sanctions or tariffs, such as China. This scenario isn't just theoretical, there's historical precedent. The global nature of Singapore's economy, which thrives on being a neutral hub connecting East and West, makes it particularly vulnerable. If secondary tariffs come into play, multinational corporations may hesitate to use Singapore as a central trading hub for fear of increased costs and bureaucratic complications. Moreover, trade agreements that Singapore has painstakingly built with other regions could come under strain. Partners in ASEAN, Europe, and even emerging markets might rethink their strategies if Singapore finds itself caught between conflicting economic blocs. There's also the danger of trade alliances fragmenting as countries scramble to protect their own interests. If Singapore loses its reputation as a reliable, stable trade partner, it could weaken its strategic position in the global market, a blow that would take years to recover from. These hidden risks demand vigilance. Singapore must navigate this geopolitical minefield carefully, finding ways to maintain its economic independence while adapting to shifting global power dynamics. The stakes, how Singapore can fight back. While the challenges Singapore faces are significant, this isn't just a crisis, it's also an opportunity. As history has shown, Singapore's strength lies in its ability to adapt, innovate, and thrive in the face of adversity. Now is the time to lean into those strengths. One critical strategy is diversifying trade partnerships. By deepening economic ties with ASEAN member nations, Singapore can reduce its dependency on any single market. ASEAN's collective market power offers a promising buffer against external shocks. Additionally, expanding partnerships with the European Union, which already shares strong trade agreements with Singapore, provides access to a stable and sophisticated economic bloc. Emerging markets also present untapped potential. Nations across Africa, South Asia, and Latin America are experiencing rapid economic growth, making them valuable partners for trade and investment. Singapore's reputation for efficiency and innovation gives it a competitive edge in these regions. Strengthening ties with nations like Australia and Vietnam can also serve as a vital counterbalance. Australia's rich natural resources and Vietnam's dynamic manufacturing sector complement Singapore's strategic role as a trade facilitator. These relationships can create a robust network of trade routes that bypass some of the current geopolitical tensions. Another key opportunity lies in embracing the global relocation of supply chains. As companies seek alternatives to China, Singapore has a golden chance to position itself as a hub for advanced manufacturing, logistics, and technology-driven industries. By offering incentives and leveraging its highly skilled workforce, Singapore can attract multinational corporations seeking stability and efficiency. In the face of this economic turbulence, Singapore's resilience and adaptability will be the defining factors. By seizing these opportunities and forging new paths, the nation can not only weather the storm, but emerge stronger, more competitive, and better connected than ever before. Singapore's story has always been one of resilience, adaptability, and transformation. In the face of shifting global tides, it has not just survived but emerged stronger, setting benchmarks for innovation and progress. The current challenges, though daunting, are no different from past trials that shaped Singapore into the thriving hub it is today. The real question isn't whether Singapore will endure, but how it will adapt, innovate, and lead once again in a rapidly changing world. As history has shown, change isn't just a challenge, it's an opportunity waiting to be seized. Now it's your turn. What are your thoughts on Singapore's ability to navigate these economic headwinds? Can the nation continue to rise above global challenges and maintain its edge? Share your insights in the comments below. Don't forget to like, share, and subscribe for more in-depth global perspectives and economic insights. Stay curious, stay informed, and see you in the next video.